Hey folks, it's Jeremy Whaley here from Trade Maestro, and today we're going to talk about stock options and specifically why in the world would anybody want to sell stock options? And the answer is because when you sell stock options, you're basically selling stock insurance. That's right, insurance, like the good old-fashioned State Farm, Allstate, Progressive, only completely different. If you were to go to your State Farm agent or your Allstate or whoever and say, hey, I want to buy some insurance for my stocks, they're going to laugh at you. They're going to say, we don't do that. But if you call your broker and you say, I want to buy some insurance for my stocks, then they're going to probably still question you. But if you say options, they're going to say, oh yeah, we can do that. Because that's essentially what stock options are. Now, I've done another video on buying options as insurance. What I want to do in this video is talk about what it means to sell stock insurance or sell stock options as an insurance policy and why would we do that and what's the benefit. And flat out, it's because you're going to make money with it. I mean, that's the simple, obvious benefit, but let's break it down a little bit and talk about it. So first and foremost, let's define the option and understand it just a little bit. Whenever we look at call options, remember there's two types of options. There's calls and puts. A call option is the right but not the obligation to buy a specific stock at a specific price on or before a specific date. We can sum that up by saying a call option is the right to buy. So whenever we talk about selling a call option, we're selling somebody else the right to buy the stock. If we talk about a put option is the exact opposite. A put option is the right but not the obligation to sell a specific stock at a specific price on or before a specific date. So we can say that a put option is the right to sell the stock. So if we sell somebody a put option, we're selling somebody else the right to sell us the stock. Now, why on God's green earth would we ever want to give somebody the right to sell us a stock? And the answer is because you're going to get paid for it. You say, how do I do that? And I want to draw your attention to a chart that some of you may have seen before. Most of you probably haven't. This is a chart that lays out time decay of your option premium over time. Now, this is a theoretical model, but it's almost exactly like the actual model. I just drew this out manually because it was easier to manipulate that way. But when you look at this over time, if you look out over like 6 weeks, you notice the orange line and you notice how slowly it's going down. And then you get to those last 2 or 3 weeks and suddenly it's a rapid decline. What that is the rate of time decay disappearing from your option premium. Now, if you have ever bought a stock option, you understand what time decay does to you. It basically fights you the whole time. When you buy a stock option, time is your enemy. When you're buying options, you are fighting the clock from the moment you buy the option. When you sell an option, it's the opposite. When you sell an option, time is your friend. When you sell an option, time disappearing on you is exactly what you want to happen. And the faster it disappears, the happier you are. We're basically flipping the script. And so when you look at this chart right here, you look at this graph of option time decay, you can tell that last week in particular, but the last 2 or 3 weeks is the ideal time to sell options. Now, I really like to sell options with about 1 week to expiration. I have gotten into the habit of doing this. I often sell with just 2 or 3 days to expiration. Sometimes I'll sell with about 8 or 9 days to expiration. I'll go ahead and go on out for a week. But that is the sweet spot. And what's really cool about it is when you get into this pattern and you understand how it works, I hate to use the phrase you're printing money, but it's pretty kind of like similar to printing money. Let me show you what happens here. So I'm going to show you another chart, and this is a chart of probabilities. Now, if you look at this, and I just ask you on any stock, what is the probability the trade's going to go up? The answer should be 1 out of 3. Or if you put a percentage to it, it's 33%. There's a 33% chance that if you buy a stock or if you buy a long option, that trade is going to go up or it's going to go in the direction of the trade. If you shorted it or if you bought a long put, then you want it to go down, obviously. But the point is you got a 33% chance that this trade is going to go in the direction that you want it to go. What if you flip that? What if instead of buying the long option or instead of buying the stock, what if we shorted the option? That is, we sell the option. Well, we flip the probabilities. We actually have a 2/3 probability. Let's say that we short a put option. Let's say we sell a naked put. Well, there's a 1 out of 3 chance that that trade is going to go up. There's a 1 out of 3 chance that that trade is going to stay sideways. There's 1 out of 3 chance it's going to go down. Okay, so we want it to go up or stay sideways if we shorted a naked put. You have a 2 out of 3 chance. It's a 66% probability. That's before you do analysis. That's before you do anything else. Just on its face value, you double the probabilities of this trade doing what you want it to do. That's the second reason that people love to sell options. And there's a third reason people love to sell options, and this is it right here. You get paid up front. And not only do you get paid up front, that's your money to keep. A lot of people don't realize that when you sell an option, you keep that money no matter what. Unless you decide to buy to close that option, you get to keep the money. So there's a pretty famous story of Warren Buffett, you know, that guy's like makes a lot of money in the trading market. He sold naked puts on Coca-Cola several years ago and made $7.5 million in 2 minutes. Yeah. 2 minutes, $7.5 million. Now that's the amount of money that came into his trading account. Did he realize that profit? And the answer is yes, he did. Because if you understand how Warren Buffett thinks, when he commits to a trade, he's committed to buying the stock at that price. So if he's committed to it, that means he's going to see it all the way through. That means he's going to collect that premium no matter what. A lot of people will criticize that trade and they'll say, well, it only took him 2 minutes to execute it, but it took him a long time for that money to come in. No, that's actually not true. That money comes in immediately. You get paid up front. And unless you decide to undo the trade, that is your money to keep no matter what. It's one of the only guarantees in the market. That's the truth. When you sell an option premium, that money comes in and it pays you. Just in the same way that if you go to State Farm and you get a insurance premium or you get an insurance policy, you're gonna pay their premiums every month. They're gonna keep the premiums. Even if they pay out a claim, guess what they do? They keep your premiums. They're gonna keep the deductible. They're gonna keep everything that they can keep for facilitating the deal. The same is true with the stock market. Now, again, we kind of call it stock insurance. It's not technically stock insurance, but that's how you can use it. And if you watch my video on buying options as insurance, then you'll understand that a little bit better. What I want to show you right now is a chart. And I want to show you how much money is there if you were to do this trade. So let's get over here to our charts. So what you're looking at here is you're looking at the chart of a stock called D-Wave. This is one of the quantum stocks. These have been very, very hot lately. And the reason is because they've been moving really, really big. And what that also brings with it is a lot of volatility. If I come over here to our option chain and you look at just 3 days out, you're going to see we got 151% option volatility. That is absolutely nuts. And that means we get big premiums on it. So here's what we've been doing. As the trade goes up, we're selling puts. And what we're doing is we're giving people the right to sell us the stock if it comes back down, which it ended up doing right in here. And you can see it's already started to rally again. But what we did in the process is we continued to collect premium over and over and over again. And let me show you what that turned into. If you sell slightly out of the money right now, you're bringing in, with just 3 days left expiration, I mean, that's hardly any time, right? You're bringing in $1.82 per share. That's $182 per contract. Now, you can use that a whole lot of different ways. You can just look at it and say, if the stock goes up, then I collected $182. If the stock stays the same price, it goes sideways, I collected $182. Or if the stock comes down, you can say, I got it for $1.82 per share cheaper. There's a lot of ways you can look at it, but either way, one thing doesn't change. You keep the $182. And that's the reason so many people like to sell options. When you trade options, you get paid up front, you collect the premium up front. It's kind of a guaranteed income. You're putting the odds on your side, you're putting the probabilities on your side. 2 out of 3 chances of being right, 66% probability. And you've even got options, possibilities of what to do if you do end up getting control of the trade. So if you get control of the stock, if it gets put to you. So lots of reasons to be selling stock insurance, lots of reasons to be selling options. If you want to learn more, there's only one thing to do right now. That is to like and subscribe to the channel. Like and subscribe so you get all the updates. And of course, if you haven't done so already, check out a brand new program over at Trade Maestro. It's called the Retirement Wheel, where we're going to teach you how to use this strategy of selling options to get paid every week or every 2 weeks, however frequently you want to do it. It's all included in this training, where we're going to show you exactly how to just turn that little premium selling machine into a flywheel that creates money for you week after week, month after month. It's fantastic. If you haven't checked it out, check it out. Put the link down below. And as always, thanks for watching. If you got any questions, let me know. And until next time, happy trading. We'll talk to you soon.